America claims to own more than 8,000 tons of gold, the largest reserve on Earth. But that gold hasn't been fully verified in more than 70 years. And that matters more than people think. Gold is not just a shiny relic. It still plays a silent role behind the US dollar. Even though the dollar is no longer backed by gold, the Treasury still lists that gold as an asset. And it lists it at a frozen price of $42 per ounce, a price from the 1970s. At market price today, that same gold would be worth hundreds of billions of dollars. If that gold truly exists in full, the US could revalue it and instantly strengthen its balance sheet, which could reduce national debt, support the dollar, and calm global markets during a crisis. That's why the presence or absence of this gold is not a small topic. It affects national stability. Now flip the scenario. If even a portion of the gold is missing, leased, or fake, that would mean the US has been overstating its assets for decades. That would destroy trust in the dollar, inflate borrowing costs, and push other countries toward gold-backed currencies. It could trigger a chain reaction across bonds, banks, and international trade. So when people ask, why won't they just open the vault? The answer might be this: because the result of the truth, either way, would shake the world. If the gold is there, revaluing it could shift markets overnight. If the gold is not there, confidence could collapse overnight. That is why secrecy itself is the warning sign. The question is no longer, do we have the gold? The real question is, why is the truth too dangerous to reveal? If the US gold is truly there in full, the Treasury could revalue it to market price. That single move would instantly add hundreds of billions in assets to America's balance sheet. That would strengthen the dollar, reduce perceived national debt, and boost global confidence. It would also give the US a powerful financial weapon in a future crisis, because gold holds value when currencies fall. But now look at the opposite scenario. If even a fraction of the gold is missing, swapped, or fake, it means the US has overstated its assets for decades. That would destroy trust in the dollar, raise borrowing costs, and force nations to ditch US debt. Countries would rush to gold-backed alternatives. Inflation could accelerate, and the credibility of the US financial system could snap almost instantly. So the risk is symmetrical in scale. If the gold is there, its truth is extremely powerful. If the gold is not there, its truth is extremely dangerous. And maybe that's why the vault stays closed, because confirming either answer changes the world. Silence is the only position that doesn't move markets.